What's going on, everyone, and welcome on into the video. We have a great video planned today. We're talking the head and shoulders pattern. Not only what it is, we're talking about how to trade this pattern. We're going to use some live examples, taking you through step by step what you need to know and how you can go about trading this pattern for yourself. So stick with me here. We're going to go through step by step, but first we got to talk about what this pattern is for those who may not know. And if you do know, skip ahead a few minutes and we'll be right into the good stuff, talking about charting levels, talking about risk levels, talking about how to actually plan and execute this trade for yourself. So the head and shoulders pattern, we're going to look at a visual, but essentially if you're looking at me, it's going to look quite similar. Right? We're going to have a shoulder here, we're going to have a head, and we're going to have another shoulder, okay? And that's kind of how this chart is going to look. But what this is actually a bearish pattern, okay? This pattern has a baseline, it has two shoulders, and it has a head. And what we're looking for is, as this pattern plays out, when it cracks that baseline, or the neckline as we say, that is where we can see significantly more downside. And generally speaking, this pattern can be seen across a lot of stocks that are topping out after very nice bull runs, after significant upside moves, after uptrends, or even on the overall markets after big time bull market cycles. So you have to understand that there are three peaks to this pattern. We have the two shoulders and the head being the highest peak on the pattern. Okay, this is one of those great reversal patterns going from bullish to potentially bearish as we crack the neckline, and can be used on multiple time frames. We'll talk more about that in just a second. So here's a view of this pattern, right? We have a move to the upside, we have a left shoulder, we have a pullback down to whatever point it is. That point isn't super important just yet because we're just establishing that point right there. Then a push higher, we go above the left shoulder, we go above this high, hit a high right here. We come right back down. Generally speaking, we come down towards this low. It doesn't have to be exactly at that low, but we come down towards this low that we made after the left shoulder. Then we bounce back up, hit a relative high. We don't go above the head. This could be slightly above, slightly below this left shoulder, the right shoulder I'm talking about now, but it does not go above the head, okay? It cannot go above this high. Then we come back down. As we come back down, as we breach below the lows that we saw here after hitting the head high, and coming back down to that trough, and as we hit that first shoulder high back down to this point right here, that is our neckline. And then we breach that neckline, that is where we can see substantial downside, and that is essentially the pattern playing out for a bigger move to the downside after it plays out. Now, really quick, when we talk about the time frames here, this is showing us a chart. This could be a 1 minute chart, this could be a 5 minute chart, this could be a 1 hour chart, this could be a 1 day, could be a 1 week chart. And when I say that, that means all of these candlesticks are whatever time frame we're talking about, okay? So if this is a daily chart, as we like to say, then each of these candlesticks will be 1 day. So this chart, or this pattern, plays out over the course of weeks and months to kind of establish this many candles in this pattern. Now, if it's a 1 minute chart, this happens through the course of a day. And you could trade this for a day trade, right? So it depends. It does not matter what time frame you're looking at for this pattern to play out. It can play out on any time frame, but you just have to understand whatever time frame you're looking at and charting out this pattern, you need to understand that, hey, I need to provide myself or give myself enough time. Either it's a swing trade or it's a day trade, and I need to back my way into that by essentially charting out how long this pattern took to play out. Then it can give me a better sense as to how long I may look for in terms of my downside targets to play out as well. Okay, so we got that. Now, okay, how do we trade this? Where do we go? What do we do? If you have a collection of stocks on a watch list, that is the best place to start, stocks you are familiar with, okay? Now, if you don't, we'll talk about how you can handle that. And if you do, but you're not seeing any head and shoulders patterns, then there are some things we can do. So if you need a place to go to find more resources, to find more stocks, let's take a look at finviz.com. So I go to finviz.com, and here's the site that we're going to see. And I'm going to go to the screener tab, which is this tab right here in the top of this site. This site is free. There will be a link in the video description down below if you want to check it out, or just type in finviz.com. Okay, so we come to this site right here. Now, what do we got? We got a list of pretty much any stock in the market that we can trade. Now, we don't want that. We want to kind of narrow this in. So what I'm going to do, and Finviz is a great place for this, I'm going to go to Signal right here. I'm going to go to the bottom of my drop down, and I'm going to find where it says head and shoulders. So Finviz is going to do this for us. Now, it's a computer, so it's not perfect, and you may see things differently than a computer sees things. So now we're going to get a list of 87 stocks as of right now. Now we can narrow this in a little bit more, okay? So you can see that we're looking at, there are some ETFs here, there are some individual companies. I may want to look at a specific sector that I think is topping out. I may want to look at a specific type of stock. I may want to look at small cap stocks. I may want to look at large cap stocks. That is the power of FinViz now, because we can kind of customize that. Let's say I want to look big picture. I don't want to look at small caps. I don't want to touch anything that is less than a 2 billion market cap. Okay, well, I'm going to go to the market cap scanner right here, and I'm going to go to plus mid, which means we're looking at stocks over $2 billion market caps. We've gone from 87 stocks now down to 29 stocks. And of course, we can hover over all of these stocks to get a quick look at the past few months on the chart. But let's say I want to narrow it down even more. Let's say I want to go to price. I want to look at stocks that are over $50 per share. Why would I want to do that? Well, that's because I might want to play options, or I'm not a fan of stocks under 50 bucks, or I like the higher price points. It's up to you. Now I have 14 stocks from here. I think we're in a good spot to kind of play this out. Okay, so let us take this and use this as an example. Now, there's more to customize if you want to, but here, 14 stocks, I can kind of go through this and take my pick out of these 14, which ones I like the most. As I'm scrolling down, I see Pool. This kind of looks like a funny stock. It's Pool Corporation. It has a kind of an interesting ticker symbol, POOL. And I can quickly look up the company right here. I click on their name, and boom, we're up to their site. Okay, so they're the world's leading distributor of swimming pool supplies, equipment, and related outdoor products. Awesome. So it literally is what the ticker symbol says. It's a pool company, okay? Now, their stock is trading up here at $441 as we speak. And what we're going to see now on FinViz is they are going to show us the head and shoulders. They're going to use L, H, and R, okay? L stands for left shoulder, which we can see right here. H stands for the head up here, and we can see R stands for the right shoulder. First things to note here, this is a daily chart. Each of these candlesticks is 1 day. This pattern plays out from September, where we have that left shoulder. We have this head in November, and we have the right shoulder in March. This plays out over the course of months. So if I'm looking at downside here, now what I want to make sure I'm thinking is I'm not thinking this is going to be a trade for this week. I'm thinking this will be a trade for the next couple of weeks to the next couple of months for my downside targets to play out, unless I get stopped out in a shorter time frame. So when it comes to how to trade it, we need to identify it on a chart first. That is the first thing we got to do. Identify the pattern on a chart. We need to have a collection of patterns. Let's say there's 5 stocks. Let's say there's 10 stocks. Do this, chart these out, find 5, find 10, find 2 head and shoulders patterns that you like. Now, on top of this, we're pretty much talking the technical pattern here, but we can also back our way into this trade by understanding the sector. So this is a pool stock, right? We understand the housing market has been super, super hot, and we're going into, let's say, the spring and summer. This could be a hot time of year for this stock. So you want to go back and check on the history, which we'll do here in just 1 second to kind of back our way in. Does it make sense? But maybe you think the housing market's topping out. You think less people are going to be wanting to put in pools. You think there's less demand after the past couple of years. This could be a good backside short, and this might actually be a really good trade for you. So that can also kind of feed into the trade as well, having a fundamental approach and having a bigger thesis rather than just the chart and just the pattern, because combining the two could be a really good strategy for you. So what I have done now is I am looking at Webull. This is the Webull platform, and we have plenty of videos, tutorials on Webull, also FinViz. We have 2 playlists already on the channel that will go through both of those things in great detail for you if you want to dive into them. So what we're looking at right here is the weekly charts. This stock has done quite well going back. Look at this uptrend, right? It's gone parabolic, and this actually looks like it could be setting up to really be, the end of this bull run over the past, looks like, 5-10 years. And maybe we enter a downtrend in the near future. So this actually is not a bad idea, right? Just chart wise, if you're watching this video, like, relatively, soon after we post it, this could be setting up in a good way. Now, here's how we can go about it. So each of these candlesticks is 1 week. Let's go to the 1 day. Okay, so let's now draw out our head and shoulders, okay? So what I'm gonna look at is, boom, here's our left shoulder, okay? We have our head right here, and we have our right shoulder right here. You can play it 2 ways. Now, ultimately, right, there's probably more individual kind of nuance that you could, use to your advantage and play it different ways. But this is our neckline. So what I'm looking at is I'm gonna chart our neckline right now. I'm gonna use a horizontal line. And I'm noticing that, hey, we are really, this neckline is right here, like this 435 to 445 area is a really good spot. Now, we did dip below and the market got kind of weak back here in late February, but for the most part, we've been holding this 435, 436 area as our neckline. So I could play it for the crackdown below the neckline. So if we start falling underneath this 435, I'm getting in, right? Or I could play it a different way. And the other way I can play it is I can play it saying, let's say we have established kind of this head and we're up here towards like 450 or so. And I see, hey, this is a right shoulder here. If this pattern works out, we're not going back over, in this case, it's like 490 bucks, which is the top of these candlesticks, the top of that right shoulder. I'm going to enter right here with a starter position, or I'm going to enter right here, and my risk is going to be to the top of those candles. So you're kind of front running the trade because you're kind of seeing it before it happens, and you can get a slightly better average. Obviously, other channels, other traders may tell you otherwise, but it's quite simple at the end of the day, right? If your risk is smaller than your reward, and you make sure you stick to that plan, and you're seeing something and you're predicting something to happen because of technical pattern, because maybe fundamentally speaking, you're also in this, okay, I think we're going to see, a decrease in demand for pool supplies. They're going down. Their earnings are kind of slowing down. This could be a great way to front run it, but using a stop loss and knowing your risk before you get to the trade. So don't just blindly jump in. I don't care. At the end of the day, anybody who says you have to trade this pattern a certain way is full of it in a sense, because you could trade anything however you want to trade it. And there are all types of traders out there who trade multiple different types of patterns in many different ways than what you may be familiar with because of someone else you follow or whatever. So it really comes down to you. Okay, so we've established the pattern. Now what we're going to do is we're going to chart our levels in terms of downside, upside. So look at this right here. I'm seeing a gap fill. I'm seeing some consolidation back in here down into the 375 to like 325, even 300 bucks. I think it's realistic we can come down to this range. I'm just looking at the chart saying, hey, we legitimately could come down into this range below this 400 bucks, the low that we saw back here. If we do, that could be a really good target. So if I'm looking at this trade, now I want to establish my risk. Okay, so we kind of have our zone of target, right? $400 or less, essentially. So what I'm going to do right now is I'm going to now chart my levels. So I'm looking at us right here. We're kind of hovering at support. We could bounce a little bit from here, and that could be a better entry on this trade. But either way, if I take a position right now where the stock is trading at right now, this second, from where we are to the highs is about an 11% risk. So I'm going to risk 11% back up to the top of the right shoulder. If we go above the top of the right shoulder, I'm out. I'm not going to touch it. I don't want to be in this stock. It is what it is, and the trade didn't work out. So if I'm going to risk 11%, what I think is one of the most important aspects of trading is I want to make sure that I'm looking to gain at least 11%, ideally more. Now, why I say at least 11% is because in this situation, if I'm risking 11% to make 11% and I'm right 51 out of 100 times, technically speaking, I'll make money if my risk management is locked in, okay? Ideally, we'd want to look for a little bit of a higher percent gain to the downside here or to the target, because we want to make sure that we don't have to be right half the time. We can be right 45% of the time, 40% of the time, 35% of the time, and still make money because we are risking less, significantly less than our reward. Now, in this case, this is a big pattern here. If we zoom out to the weekly chart, right, we're seeing this. This could be a really big pattern. This could take months to play out, and it could be a really good trade. But, right, we got to let things play out, and now our downside targets can come into play. So if I risk up towards that right shoulder high, right, that's 11%. Now downside, right? First target, if I'm targeting 400 bucks, guys, that's not going to cut it. That's only 8% from where we're at right now, okay? So first target might be down towards 375. And in this case, 375 is about a 14% gain. Now, why I say 375? Obviously, we can look back to the left, try to find areas of prior support resistance in prior areas, or we can look at kind of psychological levels. 375, 3.25, it's a nice whole number, and it could be a really good target psychologically in terms of buyers stepping in and whatnot. So that could be the first target. Let me just draw out these lines right here, guys, so we can kind of see these target levels, okay? So I'm just going to draw horizontal lines at these targets. So 375, it's about a 14% gain from where we're at right now. Boom. I'm risking 11 to make 14. That's good risk reward in my book. Obviously, it could be better, but that's going to put you in a good place, and you only got to be right half the time, and you're profitable in the long run, okay? So I'm going to draw a line right there. I know we kind of have this box in the way, but now maybe my next target is down towards 350, and my target after that maybe down towards 325, every 25 bucks. These could be targets that I'm looking at in terms of downside on this specific stock, okay? So now from these levels, let's just do the math on this. So from where we're at, right, if you're targeting 350, that's 20. And if we're targeting 325, that's about a 25% pullback from where we are. And those could be some really good profit targets to have on this stock. And then down here towards the lows that we saw of that consolidation back in early 2021, or that dip in early 2021 right here, this low puts you down towards like 305, about a 30%. So if I can risk, let's say 10% to make 30% on this trade, that's a really good risk reward in my book. I will take that trade all the time. So we have to let things play out, but that's essentially in a nutshell how you'd want to go about this. Now you can do this exact same thing on a 1-minute chart, on a 5-minute chart, on a 1-hour chart, on a short term for a day trade, on a long term. In this case, this would be a bigger picture swing trade to the downside, a short. We'd be shorting the stock to look for downside here. We can play the exact opposite, which is the inverse head and shoulders, which we'll have a video on that very, very shortly. So make sure you're staying tuned. Or if you're watching this video after the fact, it's already up. I would highly recommend you check out that video too. But what you'd want to do as well here is set price alerts and set your sells or set your targets, set your limit orders. So if I go short right now and I short this stock, I don't like having hard stop losses. So what I'm going to do is I'll put my buy-in target zones, right? I'll chart those zones out. What I'll do is I'll go ahead and I will click on control click and I will go to create alert. And when I see that this stock goes above, let's say 485, which means it's getting close to the top right here. So I'm going to go 485 flat, price above. If this stock goes above 485, well then guess what? I'm going to be alerted to that. And if it does, I'll check back in and now I can put my stop loss there if I need to, because I got to watch as closely. It's coming up to my stop loss. I got to make sure I get out of this trade when I said I'm going to get out of this trade so I don't risk more than I originally planned on when I started out. And you can do the exact same thing on the downside. And the final step will be executing and adjusting. Let's say the stock starts to fall back off and it goes down to 400 bucks. What you may want to do, because you've already guaranteed a green trade here, is you may want to bring your stop loss back down to your average or just about near your average so that if it comes back up, you can get stopped out for break even or for a small gain. This way you don't let a green trade turn into a red trade, even though your targets are still as follows. We could bring our stop loss in just so we don't have a green trade go red on us. And that could be really important, especially for the longevity of your career. We will leave links and resources down below to a technical analysis trading course if you want to learn more about doing your own charting, support, resistance, indicators, trend lines, all these different patterns. That's a great place to go, as well as videos and playlists on Webull and Finviz if you want to learn more about those different platforms. Those will be already linked up here in the playlist tab of the channel on our channel homepage. Thanks so much for watching. If you got something out of the video, consider subscribing, sharing it with a friend. This is a great pattern that you can utilize in your own trading and investing. I highly recommend it. It could be a really fun pattern to let things play out. Of course, looking at the big picture here, this situation on pool might actually be a really good trade. Let me know your thoughts in the comments down below. Any questions, we'll be happy to answer them down there as well. And we'll see you guys in the next one. Peace.